Welcome back to the channel and thank you for joining in today. Today I'm talking about the Fed meeting which happened yesterday. So yesterday the Fed had their FOMC meeting which gave them the opportunity to either increase the interest rate or reduce the interest rate or somewhere in between, just pause the interest rate. Now, why is this meeting important? It's important because Fed, the FOMC, they in charge of money policy. They make monetary policy. They decide on things about interest rate, overnight interest rate, and sort of that. Just monetary policy. So that is why their meeting is very important, because when they do that, they kind of directly or sometimes indirectly affect our pocket, affect our financial situation, because we have to pay more on interest rate or on our credit card or maybe loans or maybe even mortgages. So their meeting is very important. This is part of federal government that make monetary policies. So that's why we all pay attention to it. Since we're trying to build this generational wealth, since we're trying to change our financial situation, now we're trying to invest. So we need to pay attention to them. So we have the meeting yesterday. Now, when it comes to investment or trading, it's sometimes psychology. It's psychological. It's just the way people perceive things. That is when they trade. So even though the fundamentals is also as important, but don't count psychology trading out of the equation, because people do things based on what they think or what they think might happen. So psychology has a lot to do with investment and trading. So we have to do that. So I'm just making this video for us to kind of position ourselves to what is coming. So the meeting said this time around, we are not going to cut interest rate, which means the interest rate is paused. Now, if you pay attention to this, in the last 3 meetings, the Fed has been pausing, which means they are not increasing the interest rate, and at the same time, they are not bringing it down. They just remain right there in the middle of what it was the last time they increased it, which is 5.25% rate. So they are pausing it. They are not increasing it. Now, I made a video a while back where I said once they start pausing and pausing and pausing, the high possibility that in one day, soon, they are going to cut, because they are not going up, which means now they see inflation going into the direction they want it to go, and they are not just 100% confidence or highly confident yet. So they still kind of wait playing the game of wait and see more data, and that's why they are pausing. But if you keep going on over and over pausing, there is high possibility that it's going to eventually comes down, and that is where psychology comes in. Now, once they start coming down, then the same reason why people kind of take their money off the market was because they believe the company is not going to make money that much, because the interest rate, the cost of investment and borrowing is high. So now, when it's not high, what do we perceive they're going to do? People will start coming back into investment, which means the stock and the prices of all these shares is going to start going up. That's why I'm making this video, in order for us to understand that and for us to be positioned really well, to position ourselves into what this decision that we're making, right? Now, I cannot tell you what to do. I'm only trying to say, hey, this is what is going on and this is what I am doing. This is my own opinion into this situation. So once it start coming down, people start coming in. The stocks and the share will start changing from all red into green. And I want us to pay this attention. When it comes to the growth stock, which these 3 sectors, I want us to pay attention to it. When they start cutting that rate, pay attention to the percentage rate that the growth stock is going to be going up compared to the blue chip stocks. I want us to pay attention to that. But before I go for, let me just play this, and that way we probably can really understand what I'm talking about, and be able to to prepare ourselves into what I'm talking about.
So
let me play this for you.
almost every participant on the committee does believe that it will be appropriate to reduce rates, and for partly for the reasons that you say. We feel like inflation is coming down. Growth has been strong. The labor market is strong. What we're trying to do is identify a place where we're really confident about inflation getting back down to 2%, so that we can then begin the process of dialing back the restrictive level. So overall, I think people do believe, and as you know, the median participant wrote down 3 rate cuts this year. But I think to get to that place where we feel comfortable starting the process, we need some confirmation that inflation is in fact coming down sustainably to 2%.
If I could ask differently, if you hold rates high as inflation moderates, as it has been, target rates will exceed the prescriptions of the Taylor rule or experience. What would be the reasoning for holding rates higher than the levels recommended by those rules in the current instance?
Well, I think, as you know, we consult a range of Taylor rules and non-Taylor kind of rules. We consult them regularly. They're in our teal book, and they're in all the materials that we look at. But I don't think we've ever been at a place where we were setting policy by them. And they're, depending on the rule, it will tell you different things. There are many different formulations. Another way to think about it is implicitly is so. In theory, of course, real rates go up if holding all else equal as inflation comes down. But that doesn't mean we can mechanically adjust policy as real rates, as inflation comes down. It doesn't mean that at all, because for one thing, we don't know. We look at more than just the Fed funds rate. We look at broadly financial conditions. But in addition, we don't know with great confidence where the neutral rate of interest is at any given time. But that also doesn't mean that we wait around to see the economy turn down, because that would be too late. So we're really in a risk management mode of managing the risk, as I mentioned in my opening remarks, managing the risk that we move too soon and move too late. And I think to move, which is where almost everyone on the committee is in favor of moving rates down this year. But the timing of that is going to be linked to our gaining confidence that inflation is on a sustainable path down to 2%.
So this is what I'm talking about. So we know sooner or later they are going to cut rate. When this thing happens, we are going to be in the situation where we want to be. Once they start cutting the interest rate, the stock market seems to come around and start rallying. So this is why I think we should kind of talk about it before then. I always say something like we have to get there before we get there, which means we have to kind of prepare ourselves before we actually get there. We have to, do, what we need to do, So let's even assume it's not happening in March, as they said. Let's prepare for the second half of the year. So that way, when it starts turning green, we will be there, to enjoy, decision that we have made. Now, let me show you one more thing about this. So that way, we will be able to understand it even more. So if you look at it, this is what it means, the FOMC. This is the next meeting. You're going to have the next meeting here. And if you go up, I just want to show what does it mean? The FOMC, the Federal Open Market Committee, which is the committee that actually make decision about monetary policy. They decide the monetary policy and interest rate, interest on loan, mortgage rate, and all that. So that's what they do. Now, if you look at this, that was yesterday that they had the meeting. But if you look at this, you can see that the following day, which is yesterday, they had almost 300 and something. The Dow was down 300 and something points, and say likewise the Nasdaq over 300 points. But today now, because that's all the news has been factored into the market now. Like I've said, it's mostly about it's psychology. It's the way people perceive things. That's when it comes to investment and trading, is sometimes psychology. Even though fundamental has a part of it, but psychology has another part, a great part in it too. Look at the Dow today now. The Dow today, it came up 340 points, and S&P 500 came up 61 points, and Nasdaq came up 200 points, which is 1.32%, and Russell 26 points. So these are all the for today. And when things start changing, believe me, we can see all these things changing. This is the index as of today, and things are going to continue to change. So we have to just kind of prepare ourselves for it and make sure that we are well positioned in the market. We have to trade the market. We have to get there before we get there. And like I've said earlier, I want us to pay attention into the percentage rate that the growth stock, I'm talking about the stock of cannabis, the stock of EV, the stocks of crypto, is going to go up when they start cutting rates, which I expect by the second half of this year, because it's psychology. This is what people do. Now, if this is your first time on the channel, this is a channel where we try all our best possible best to build a generational wealth, and we are on the path of building that generational wealth because we are following the platform, the roadmap of what has been done before. So we are not doing something different from what the millionaires and the wealthy people have done. We are doing the same thing. We are just following the footsteps of what has been done. If this is your first time, I'd like you to subscribe to this channel, and I'd like you to share this video. I'd like you to hit like. I'd like you to hit love. I'd like you to comment on this channel. So that way we can all journey this journey together. Nobody knows it all, but we all seems to know it all. Thank you for joining me today. Thank you for taking time out. Until I see you in the next video, thank you and have a wonderful day.